Welcome back. You're watching Buy Now, Sell Now on ET Now, the show where we get you answers for all of your stock-related queries. And today we have the Techie Special show where we will take your queries to a technical analyst. Today we have Kunal Bothra as well as Hemen Kapadia joining us on the show to make sure to help you with all your short-term queries, all your technical analysis queries that you'll have. We have today Kunal and Hemen, the best in the business, to solve all of those queries for you all. Very good morning to you, Kunal, as well as Hemen. Thank you so much for joining us on this very special episode of Buy Now, Sell Now. And let me kickstart with the queries that are already pouring in. This one is coming from Edwin. He's writing to us from Kerala, and he's holding 430 shares of Adani Wilmar at a price of 542 rupees per share. He's holding this counter for the last 2 years. He wants your view coming in on this stock. What should he do? Hemen, coming to you on Adani Wilmar, what's your view on this one? He's 542 is his buy price.
A very good morning to you. Thank you for having me on the show. The stock is going nowhere, but I don't think it's a sell. We've been moving sideways for 3 and 3.6 and almost 9 months, but the bias is neutral. It's not negative. I believe 320 breaking in terms of closing could set the alarm bells ringing, but nothing positive can happen till it takes out 420. But once again, I don't think it's a negative formation, so I'd say hold, keep your eyes on these levels, but till 420 doesn't get taken out, it's going nowhere.
Moving on to the next query. The next query, Kunal, is coming from Umesh Gupta from Vadodara, and he wants a suggestion that which amongst the Ratan India group of stocks is the best for the long term. Ratan India Enterprise as well as Ratan Power. Ratan India Enterprise is quite seen to be consolidating, but Ratan India Power is definitely on the roll. So any of the stock you still like for a long term?
See, Ratan India Power is a very circuit kind of an oriented stock. So, it may look very attractive when it's going up, but then on the way down, whenever that correction happens, exiting these stocks becomes a lot more tricky. So, I'm not sure whether you're just keen into buying this group itself. You may consider buying, Ratan India at current levels of 70, 73. I think it's coinciding or just coming back towards its 200-day moving average. That could probably mean that in case if say in the next 1 week if the market stabilizes and the stock doesn't break below its critical moving average by a huge margin, then you may probably expect that the stock may get into a revival. So the risk reward to enter could be attractive. Ratan India Power you can play as a momentum stock, but then as I said that because it's a T group name as well as a penny kind of a stock, you may have to be very cognizant of the kind of volatility which the stock may exhibit over the medium to long term.
All right, this one is coming from Rohit. He's writing to us from Pune, and he has ITC in his portfolio, and shockingly he is one of those investors who's making a loss on his holding in ITC because he bought it at an elevated price of around 436 rupees per share. He wants to know what's the opinion on the stock now, what should he do, what's your take coming in on this, Hemen? ITC, seldom have actually heard anyone say they've made a loss in this one, but yes, we have a viewer who's bought this at an elevated price. What should he do now?
Cheryl, depending on the time frame, if it's a long term, we have a shorter term short today, but it's a long term hold and it's a buy on declines. We're at 437, we're at 427 now. It's in a longer term correction. A target would be something closer to 600, but this is probably a 2-year view. Extreme near term, I don't expect anything spectacular. Having said that, I don't see a bigger downside either. So if it's a short term view, you can exit for the time being. If it's a longer term view, closer to 400, it's a buy.
All right, moving on, and Hemen, once again coming to you. This query is on BEL. V. Venkatesh wants a suggestion on BEL. How is the short-term setup looking like for this one? He's already holding the stock from a price of 294 rupees.
Well, like most of the market, it's a bit stretched, it's a bit tired. It remains in an uptrend on all time frames. But this recent move from 220 to 300 odd, the stock is consolidating for the 6th trading session by moving sideways. Going nowhere, don't expect a big decline. But yeah, it's sitting on top of a humongous rise. I think you keep a stop loss of 285 with a shorter term view. Longer term, it remains safely ensconced in an uptrend.
you. This one is from Naman Deora, who's writing to us from Kolkata, and he has 3 stocks he's asking a query on, but one of them is recently listed, so I'll not ask that one to you. So he's asking about Cupid, 900 shares at a price of 134 rupees per share. And the next stock is On Mobile. He has that one at the price of 108 rupees per share, about 3,500 shares of that particular counter. What's your outlook for till December end for these counters?
Both for from that kind of a time frame are exit, because both these stocks are struggling below their long-term moving averages. In fact, specifically for On Mobile, that stock has been struggling below its long-term moving average specifically over the last 4-5 months. I think the stock had broken below this level, closer to 100 mark in the month of January and February start. And from there, the stock had fallen down to as much as 60. So it still looks like the stock would take a lot of time to get into a recovery, unless it breaks past above its 200 DMA, which in the near term looks a bit more tricky. I would probably expect that the stock could remain into a drag mode. Even for Cupid, I think the stock, pre the special situation had almost touched levels of 3,000 plus, and towards an adjusted price, it's almost at 135, 137 in that kind of a time span. But the stock had moved up almost 10x in a span of, I think, less than 1 year. And after such kind of a stellar uptrend, you may probably expect that the stock may broadly consolidate, even correct. So nothing exciting in the near term for the charts. And since you are a short-term investor, short to medium term time frame investor, I would suggest to exit.
All right, that's the take coming in on a couple of names. But Hemen, the next query is specifically for you from V. Murli from Bangalore. He wants a suggestion on 2 counters. Firstly is DB Corp. Can he buy this counter at a price of 280 rupees or rather 300 rupees that is showing right now? Other than that, what's your view on Hutco? The company did post a good financials this time around, but on the technical front, would you advise for a buy here?
DB Corp quantifies as a buy. The way I see it, we've gone 6 months in a time price retracement. The bigger picture remains unequivocally bullish, nothing to worry about. The level, I would say, just spread your purchases, because volatility is not past us, and we still have a event risk in a couple of days. So we're at what, 300? Anything closer to, I'd say buy it at 290 and maybe 255. One can expect a price, but once again, it's not a very shorter term view, because after 6 months, 7 months, you're going to take time for it to go up. So yeah, only if it's a long term view, it's a buy. It's a very clear buy. In terms of Hudco, one gets the feeling that it's had a humongous run. Currently, if it's a shorter term view, stop loss at 245. We've had a very strong run, so I would say keep a strict stop loss and then quick entry, quick exit sort of a scenario.
All right, this one is coming in from Yuvraj from Bangalore for you, Kunal. He wants to know which mid-cap IT stocks can he buy in this correction, and which of the charts are showing that the stock is on the path of reversal. He also wants to know which sector will outperform after elections.
See, it's going to be a high beta space. My assumption is that you've already calculated the the risks associated with the sector because of the way the sector has behaved over the last 2 years, and the expectation that if the US market continues to remain into a bit of a iffy scenario, then you may probably expect the IT stocks to continue to drag for some more time. But I think looking at the charts, the near-term prospects, the recent recovery, Coforge is something which has started to look a bit more attractive at current levels. Yes, the stock had rallied up from 4,400 to 5,250, 300 mark in the last, I think, 3-4 weeks. It's come back towards 4,900 mark today. So I think the risk reward, the balance for the stock is a lot more better this time around. And hopefully, if we get a retest again of that 5,300 mark for Coforge, we may expect that the stock may get into a breakout as well as a decent uptrend over the near to medium term.
All right, moving on to the next query, and the next query is coming in from Radha from Bangalore. And Kunal, she's been holding Jio Financials from a price of 343 rupees. What's the outlook on Jio Financials as well as ITC? She's holding over 300 shares from a price of 441 rupees. What's the outlook in both of these names?
See, Jio Finance, you can continue to hold on if you're a long-term investor. Of course, the chart history is a lot more limited for me to try and suggest on a longer term basis. But the rally the stock had shown the last 5-6 months from, I think, the November levels or October levels closer to 200 to 220 mark towards a point when the stock had almost retested or touched the 400 mark. I think 394, 395 was the high for Jio Finance. So I think in that sense, at current levels of 340, the risk reward is a better for medium to long term investors if you have that kind of a time frame. So I would suggest a hold on the stock. And the second stock which you mentioned was
ITC.
ITC. So I think even for ITC, I think long term wise, I would suggest a hold. Yes, it's gone through a patchy phase in the last 3 quarters from I think August highs of 496, 497 for ITC. But I think at current levels of 400, 420 approximately, I think it's a very good buying zone. You should continue to hold on.
All right, this one is coming from Gayatri, writing to us from Chennai. Wants to know about Reddington as well as Ipca Lab. She's contemplating on buying this one, Hemen. What's your take? Makes sense to go ahead and buy both of these counters for the short term, or buy and stay put for the long term also?
Reddington doesn't quantify as a buy for the short term. It is in a shorter term downtrend, and it's probably in an intermediate correction as well. So I would wait a bit if I were to buy Reddington. And from a longer term point of view, yes, you have 195, 182 levels where you can probably buy Reddington India, but only and only from a longer term point of view. And the other stock you mentioned?
Ipca Labs.
Okay.
Ipca Labs, yeah.
Downward bar reversal setup has just got spoiled, not only in the daily chart, but also on the weekly charts. It's probably entered a correction of a greater degree, I believe. So I would say keep away from the counter for the time being. Let it settle down. Support comes in at 1160. 1100 and 1040. Resistance comes in at around 1230. Stay away. Absolutely not a buy at current levels unless you want to play for a very small 30-40 rupee bounce. Setup has got spoiled.
That's the take coming in on Ipca Labs, one of the earnings candidate as well. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.